Hey, it's Tom here and welcome back to the channel. Now, one of the more interesting companies to follow here in New Zealand on the New Zealand exchange, the NZX, is the A2 Milk Company. It is one of the best performing stocks, frankly, that I've ever seen. If you look over a 10-year time span, even though the A2 Milk Company has had a really rough 12 months or so, and the stock price is down probably more than 70%. If you look over a really long-term view, it's still performed spectacularly for long-time shareholders in the business. And the A2 Milk Company actually recently held their AGM, their annual general meeting. And as part of that, obviously shareholders can vote on various things that the company wants to propose around electing boards of directors and so on. But it was also an opportunity for shareholders to ask questions. And me being a very small shareholder in the A2 Milk Company, it's the smallest position in my portfolio, I got the opportunity to submit a question as well, and it turned out that my question got answered. So in this video, I basically want to cover what that question was that I put forward to David Hearn, who is the chairman of the board at A2 Milk, and also David Bortolassi, who is the CEO at A2 Milk. I want to cover, I guess, the question I put to them and what their answer was, and also share a few of my thoughts on their response. Now, my question specifically was basically around the long-term price trajectory for A2 Milk products. A2 was a really interesting story. I guess it was like a market darling here in New Zealand as it was going up, and like any stock, when the business kind of stumbles a little bit, now everyone seems to hate it a little bit. And a lot of the questions were kind of mind-blowing to me. Like, you know, this is the one time per year where shareholders can ask questions to the people who are really in the know about what's going on in the underlying business, and it's an opportunity to maybe get questions answered that you wouldn't be able to maybe quite figure out on your own, I guess. But most of the questions that came up in the Q&A were things like, why is the share price down? And, you know, should we be looking to sell A2 Milk to another competitor or something now that the business is ruined and all this stuff? So that kind of blew my mind a little bit, but hopefully the question that I answered here kind of got a little bit of value for shareholders, and I think the CEO and the chair of the board might have been actually pleasantly surprised to get a question kind of more probing about the underlying performance of the business and what their thoughts are moving forward, as opposed to why is the share price down and that sort of thing. So with all that said, let's get straight into the video so that you can see you know, the question and answer, and I'll give you some of my thoughts on the way through here. And I should say that if you want to watch the full webcast back of the A2 Milk AGM, that will be linked down in the description below as well.
Any other questions?
Chairman, the next question has been asked by Thomas Bottica. How do you think about the long-term price trajectory for A2 products? What factors will influence product pricing the most, and how much is in the control of A2, brand and marketing, etc., versus external factors, birth rates, competition, etc.?
So just a quick little bit of background before we listen to the answer here from David Hearn, the chairman at A2. One of the reasons that I asked this question is because there's a lot of people out there saying that A2 Milk is just a commodity business and you know, they have no control over their pricing, and I think there are some underlying truths to that. If you look at where A2 sort of source their milk from, for example, that comes from Synlait, who is certainly a commodity producer. A2 are actually about a 20% shareholder in Synlait, which I think is about a $700 million market cap roughly here in New Zealand in and of itself. So there's commodity aspects, I guess, to the business in terms of sourcing their product, but A2 have always been able to sell at a massive premium to other brands and I guess A1 protein kind of milk products. So I really want to understand what the future price trajectory looks like to you know, understand how much it really is in the control of A2 Milk's business. Like, you know, can they market themselves and continue to sell at good premiums and have great margins as a result? Or are there a lot of factors that are kind of outside of A2's control? I guess it's kind of what I want to understand here, because the price that they can sell their products at will have a big influence on margins, obviously, which will have a very substantial impact on how someone like me would calculate the intrinsic value of the company.
This is a very good question, and it's a very complex question which you could spend half a day answering. You'll be glad to know that we won't. What I would say is one of the measures of a brand's power, it's not the only measure by any means, but one of the measures of a brand's power and connection with its consumers is its ability to price premium its products. And one of the things that gives me great confidence is that while there have been price pressures in the market, those are not in any way denigrating from the fact that the A2 milk products, whether they're sold in liquid milk in Coles and Woolworths in Australia, whether they're sold in Walmart in the USA, or whether they're sold in China under IMF or liquid milk, we are able to sell the A2 brand at significant price premia wherever we sell. And I think that is a fundamental plank of the company's performance and gives us and me great confidence that the underlying health of the brand is not in poor shape, notwithstanding some of the things that you've mentioned in this question around,
this is the classic, and I'm not trying to compare the A2 milk business to something as spectacular as like the Coca-Cola investment from Buffett here, but it's the classic, Jeff Bezos idea of there's kind of two ways to win in business. One is you create a great product and have people pay you really high margins for that product, like a Coca-Cola or a Microsoft or Apple or that sort of thing. Or you try and be the low-cost producer, which is kind of the name of the game in a lot of commodity-type businesses, which, again, this is the reason why I really don't think A2 Milk is a commodity business. And, you see those sort of competitive strategies show up in things like Amazon, obviously, because it's a Jeff Bezos quote. He'd rather have a low-margin business, but with a lot of scale, than a smaller, high-margin business, is something that he said a few times. And you also have examples of that with businesses like Costco and these sort of Nick Sleep scale economy shared type models. So completely agree that if you can sell at a premium, you've clearly got a powerful brand, and that is great for margins and typically pretty good for shareholders as well.
Marketing and competition, etc. So to deal with some of the detail and what influences what most, could I turn to David again, please?
So this is now switching to David Bortolassi, who is the still relatively new CEO at the A2 Milk Company. He has been at the helm for about 11 months, I think. There's been a fair bit of management turnover, which is kind of one of the big red flags if you're ever going to do some due diligence on this company. But I've been reasonably impressed with how he's gone so far. It's been a very challenging time where they had a lot of, as I think David actually goes on to say here, very volatile demand patterns from the consumers. There'd be, parts of the world going into lockdowns and things, and there'd be a lot of sort of pantry stocking and clearing out shelves at supermarkets. And then, of course, when that happens, it takes time to clear that inventory out of your household, and you have these very kind of wacky spikes in sort of the demand for your product. So it's been a tough time, and they've had to make some big decisions around inventory write-downs and so on. But what I really want to understand from this question is how is the health of the brand doing, and are we going to continue to see big premiums in future, or are we going to get more kind of commoditized over time? So anyway, to David Bortolassi, CEO.
Thanks, David. I agree. I mean, our brand is in incredibly good condition across all categories of markets in which we operate in. We produce high quality products at an ultra premium price point, and that's reflected in our consumer pricing. Our English label IMF product has come under pressure over recent times due to the demand.
So IMF is just the infant formula products for A2, if you're not familiar.
Wide volatility that we've talked about today, and we've taken steps to address that. So as we covered before, we have taken steps to rebalance our inventory, to constrain our sales into the trade, to improve our product freshness, improve our stage mix across the range, and to invest in our brand to, again, bolster our brand equity. Pleasingly, the outcome of a result of these initiatives has been an improvement in our English label pricing, and I tried to illustrate that on one of the pages in my presentation today. Even most recently in our 11/11 sales period, English label was probably up around 30 RMB this year on average relative to last year.
So if you don't know already, A2 Milk has a very significant amount of their business in China. So 11/11 is sort of the Alibaba Singles Day, which is like a Black Friday, I guess, kind of equivalent in China, but at a much larger scale. It's massive, frankly. There was a little bit of a toned down Singles Day campaign from businesses like Alibaba this year, with all just the recent regulation and so on that's been going on around e-commerce businesses and tech in China. But A2 is certainly quite exposed to that market. It's sort of their biggest risk and their biggest opportunity is something that was said quite a bit through this AGM, in terms of it's where almost all of their recent growth has come from. It's where a huge proportion of their future growth will come from, because they have a very small market share in the grand scheme. I think something like 2.5% market share in infant formula products. So huge opportunity, but it can, obviously come with risks, being very concentrated in one market.
Positive trends in English label pricing, which is fundamental to restoring channel economics. On China label, there's been, our brand is positioned as an ultra premium brand, one of the top end in the market, and there's been a positive trend in premiumization over many years in China. More recently, due to the decline in the birth rate, excess inventory levels in the market overall, not in our business, there's been increasing promotional activity, and the average selling price across the market has come down somewhat, including our brand. And what we're doing to address that is, in the fourth quarter of last year, and particularly in the first quarter of this year, we're constraining our sales into the trade for China label as well. And we're pulling back on promotional activity with our distributors and retailers, and we're seeing some improvement in China label pricing as well, which is encouraging. Lastly, we will continue, consistent with our strategy, to invest in our brand and to innovate, which should support the premium nature of our brand going forward and support our pricing. Thanks, David.
Thank you.
So there you have it. That was the question that I am glad to see got answered at the recent A2M AGM from the CEO and the chairman of the board, David Hearn and David Bortolassi. So really interesting answer. I mean, I kind of already knew A2M is clearly not a commodity business if you look at their track record over time in terms of revenue growth or gross margins or their profitability in general. It's been spectacular. They've certainly had some pretty big stumbling blocks over the last year or so. I think probably the days of 25-30% a year growth are most likely over, and they've given some sort of 5-year out kind of projections, which when I run the numbers seems to be landing maybe a little north of kind of a 10% per year compound annual growth rate in revenue. And then we're kind of going to have to see just what happens with margins and how much profitability and cash flow that turns into. That's really what my question was kind of getting at here. They've suggested maybe some mid to high teens sort of EBIT margins over the next couple of years, and potentially getting back into the low to mid 20s slightly longer term. So yeah, it's going to continue to be an interesting one to follow. Like I say, I have a small slither of the portfolio in it. It's certainly not my highest conviction idea, but I think the risk reward profile is interesting, so I will certainly continue to cover it here on the channel. So that is it from me for this one. I do hope you enjoyed the video. If you did, please hit like and hit subscribe, and also let me know your comments and thoughts kind of on this video down in the comment section below. I think it's kind of interesting that even a small little shareholder like me is able to ask a question at like a $5 billion market cap company. That seems kind of crazy to me. This is certainly not something I think I'd be able to do with like Apple or Berkshire Hathaway or some massive company like that. But it's pretty cool to be able to get a question answered from even a relatively large company still, but obviously not Apple scale or anything like that here in New Zealand. So like I say, I do hope you enjoyed it, but that's it from me for this one, and I'll see you in the next video. Cheers.